Hello, everybody. My name is Luke Robinson, and I am a business advisor here at Collective. And Collective is your all in one solution for your back office. You can kind of think of us as, an all in one solution for an S Corp. We would handle, setting up the business, setting up the LLC, making the S Corp election, and then providing payroll services, providing bookkeeping services, of course, tax support throughout the year. And then at the end of the year, we would file your business return, the S Corp return. So we pretty much do the whole thing. But today, we are actually running our session we like to call Tax Tuesday. And essentially, what it is, it's an AMA that you can go through and ask, how to best practices on how to run your business, best practices on taxes, on bookkeeping. You can ask anything, and I'll do my best to answer it. But also, let's just kind of get the legal stuff out of the way too. Keep in mind that this is just information. Don't consider this, official legal or tax advice. I'm not an attorney. I'm an enrolled agent with the IRS. So, I am credentialed to, represent taxpayers in front of the IRS and whatnot. But still, I haven't seen, your situation. I haven't looked into it. So again, don't consider this advice. Some of the stuff I'm saying could be incorrect, like it couldn't apply to you. So before you do anything about what I say, you should always speak to a CPA or a tax attorney before, moving forward with any of this information. But now that we got that out of the way, let's go ahead and get started on some questions. And I think that we already have some. All right. I just registered a call to start. Okay, well, we're excited to talk to you. Okay, what is an S corp? Well, that's a pretty good, first question to start off with. A lot of people, I guess I would start off with by saying a lot of people kind of have a misrepresentation about what an S corp actually is. An S corp it's not a business entity, by itself. Like it's not a corporation. As funny as that is, because you think the term S corp, you think it would be a corporation, but not necessarily. An S corp is a tax election. So you either have to be, an LLC or, a partnership or a corporation before you can even elect, the S corp tax status. You've got to be some sort of business entity before you elect the S corp tax status. But before you do that, like let's say that you're just, a sole proprietorship or an LLC, a huge chunk of your earnings are subject to the self-employment tax. Long story short, so, like, for example, let's say that someone's net income is, $100,000 a year through their business. Before they become an S corp, or before they make an S corp election, that's the technical name for it. How they come up with their self-employment tax is they take 100 grand and they multiply it by 15.3%. All their net income is subject to that tax rate. But what happens with an S corp election is technically you become kind of like you become an employee of your own operation, like of your own business. So, since you're an employee, then you can now pay yourself a salary. Like your business will pay a portion of your earnings to yourself in W-2 wages. And the cool thing about S corps is the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, let's say that someone makes, $100,000, and let's also say that they pay themselves a $40,000 salary. Let's just assume that for whatever reason they determine that that's a reasonable salary for them. That first 40 grand is still subject to the self-employment tax. It's still paid. But the other 60 grand, that chunk of money is considered distributions to yourself. You can kind of think of that money as dividends almost. Some people will use that term. They're not dividends. They're, the technical name for them are distributions, but some people will use that term. So, now that this person, this hypothetical person, is paying themselves, $60,000 in distributions, that comes out to around. Let me see how much that is in tax savings. That comes out to around $9,180 a year in the self-employment tax savings. So once a business owner reaches a certain income level, the S corp election could potentially be an advantageous thing for their business. Can therapy services be an S corp? In California, is does that make a difference? Well, honestly, I can't speak from state to state because each state, rules are different. What sort of industries can be what, but sometimes, and again, it kind of depends on the state. But sometimes you have to be things called a PLLC, like it's called a professional limited liability company, and we're talking about certain licensed professionals. And then sometimes you've got to be a professional corporation. You've got to be a PC entity. So it just kind of depends on the state. So you need to research your state laws, or talk to a tax professional that specializes in your state. But as far as I know, and again, definitely consult with a tax professional before you do anything. But as far as I know, PLLCs and professional corporations can elect the S corp tax status, so it should still be possible. Okay. What's the difference between an S corp and C corp and other structures? Ooh, that's a good question. Okay, so well, it can be a little complicated, but it can also let's just kind of go through the basics of it. Essentially, there's a difference between what kind of entity structure you are, like what kind of business structure you are, and how you are taxed with the IRS. So when you're just an LLC, like when you're a sole proprietorship, or when you have an LLC, the LLC is taxed as a disregarded entity, meaning that it's not like in the IRS's eyes, it doesn't, look at it as a taxable entity. It's just a pass-through entity that goes through your personal tax return, and the tax rates are done on that. But with an S corp election, that essentially, like when you make an S corp election on an LLC, that creates another tax return requirement. That creates like a business tax return requirement. So you've got to do that. Now, when you're a corporation, that is a taxable entity. So, if you just set up a corporation, the IRS, considers you a corporation, a C corporation for tax purposes, unless you elect the S corp status, which corporations can do that. So then, instead of filing a 1120, a C corp tax return, they would now be filing an 1120S, an S corp tax return. So that's how that works. And then also partnerships. A partnership is simply, a multi-member LLC. When there's just one or more, I'm sorry, two or more people on an LLC. In many cases, that essentially means that it's a partnership. And then when you're a partnership, then the IRS requires a partnership tax return for you, and that's called a Form 1065. So there's a lot of things that go into these different structures and how they work. What's one reason business owners elect for a corp tax status? Well, I can at least tell you reasons why someone would form a corporation. And like when you're a corp, sometimes when you want to fundraise, or when you want to have several owners in your business, like multiple owners in your business, sometimes that can be a little bit easier with a corp. And again, before you do any sort of business structure, it's always good to talk to a tax attorney or a business attorney, before you do anything. But that's usually why people would form a corp. Sometimes people form a corp because you can have, literally have the, comma Inc. in your name. Like you can have Inc. at the end of your business name when you form a corp. And some people think that looks more professional. I currently have a partnership LLC. My partner and I aren't getting along and thinking about separating the business, but keeping the LLC. Can we still run the business but have two different checking accounts? How can this work? Again, I am very green on this. Like I don't have a lot of experience, on partnership agreements or anything like that. But I don't see any reason why you can't have. And again, I would really speak to an attorney that could kind of maybe help you navigate this and like what would be the best way to do this. But I don't see any reasons why you couldn't have two business checking accounts and each of you have one. But still, if you're not getting along, and you're thinking about separating the business, then you might want to think about setting up separate LLCs and just kind of getting away from each other. But again, before you do anything, I would certainly speak to an attorney. Are there any um, are there any situations where you wouldn't want to make an S corp election? Sure. Like there are certain situations where you might not want to go with the S corp route. And one is, let's say that most of your income is coming from passive income, like rental income or stocks, bonds, things like that. Passive income typically isn't even subject to the self-employment tax. So, since like the entire reason why you'd form an S corp is to save on the self-employment tax, then there's usually not a reason to make it put passive income under the S corp. So that's one reason. And then let's say that you want to have more than 100 owners into your business. That's another reason. Like with an S corp, you can typically only have 100 people that have an ownership interest in the business. So those are a couple of reasons. How often should we take shareholder distributions? Well, the distributions really are up to you. The important part between, like, you can think of your earnings with an S corp in two buckets. In one bucket, you have your salary, your W-2 salary, whatever amount that is. And that will flow from your business bank account into your personal bank account, just like a check would. So, weekly, monthly, biweekly, you can structure it as a paycheck. And then your second bucket of earnings are, and also that paycheck, it would probably need to run through a payroll processor, which is something that Collective would provide as well. That would take care of the payroll. But your paycheck would flow through that payroll processor, and then your second bucket of earnings are your distributions. And how you take a distribution is you just manually transfer money from your business bank account to your personal bank account, and you've taken a distribution. And you can typically do that whenever you want to. So there's not in terms of like the duration of the distributions. There's not really limits. But what's important is to pay yourself a reasonable salary. Like your distributions can't be too high and your salary too low, because it could increase your audit risk with the IRS. You've got to have a reasonable salary. So keep that in mind too. What does flow through in an S corp actually mean? Does that mean all the profit just gets transferred to the shareholder? Yes. So essentially, this is what will happen. When you have an S corp, you now have a business tax return that's due by March 15th. It's called an 1120S. It's an S corp tax return, and that's due before the personal return. That's due before the typical April 15th deadline for the personal return. And then after the S corp tax return is filed, you will receive, or you should receive, what's called a K1 form. And then you take the K1 form and you input information on that form onto your personal tax return. And it's usually pretty simple to file, as long as you have that form. And that's what Collective would do too, is like, of course, we would file your S corp tax return. You would then have your K1 to file your personal return. So yes, that income flows through to your personal tax return. Can we adjust a reasonable salary toward the end of the year in case the business has made more than expected to reduce audit risk. There are some people that adjust it at the end of the year, but in my opinion, it's just a better idea just to do as best as you can to keep the payroll and the paycheck organized throughout the year. So usually best practice is like, as your income ebbs and flows, you pay yourself a little bit less salary, a little bit more salary. So, you would, do a salary analysis to kind of, see what would be a reasonable salary. Um, and then as your income ebbs and flows, you could, adjust your salary throughout the year. That's usually best practice. But I have, seen some people handle the salary at the end of the year. I have seen some people do that. But here at Collective, we would encourage you to kind of like get on like a monthly salary or a weekly salary. It's just much more organized that way. Okay. Are there any limits on your no problem, George. Thank you. You're asking very good questions. But here's another question. Are there any limits on distributions? Well, the only limits on distributions, like what I would say is to make sure that you're paying yourself enough in salary to make sure you're paying yourself a reasonable salary, because at the end of the year, essentially you'll have a ratio because you'll have your total net income from the business, and there'll be a portion of that you'll pay yourself in salary, and there'll be a portion of that you'll pay yourself in distributions, and that ratio needs to be reasonable. Like you need to have some sort of justification for why you paid a certain amount to yourself in salary. So, there's only limits on the distributions in that context. Can a partnership elect S corp tax status? Yes, a multi-member LLC can elect the S corp tax status. That's still possible. All righty. I think we've got another question coming in. Do you still need to pay estimated tax deposits when you're an S corp? Yes, you potentially could. So there's one. Now that you're going to be on a paycheck, that you're going to be paying yourself payroll, then you will you should theoretically have taxes kind of automatically being deducted from that paycheck and being paid to the government, being paid to the IRS and your state if need be. So part of your taxes should be paid out of that, but then whatever is left over, then you would need to pay that in estimated tax deposits that are due quarterly, or that are due on a quarterly basis. Yeah, so keep that in mind. I see Collective does LLC formation. How does this work if I don't currently have an LLC? Do I become an S corp by doing this? Yes. So essentially, you join Collective, we'd form your LLC for you, and then we'd make an S corp election with the IRS. So if you don't have an LLC, it's no big deal. We'll take care of that for you. But if you don't have an LLC, it's usually a good idea to get it started as soon as possible, to join as soon as possible, so we can get started on the LLC and, just ensure that, you save as much money in the self-employment tax as possible. All righty. We have yet another question coming in. What's the difference between Collective and Collective's competitors? Oh, okay. Well, that's a good question. Well, Collective, this is my experience because as a new business advisor here at Collective, it's my job to speak to prospective Collective members, go through their business, go through their finances a little bit, and see if an S corp or if a Collective would be a good fit for them. And I think what kind of sets Collective apart, for one thing, is the lack of extra fees. You know, we pretty much do the whole situation. Generally when it comes to an S corp, and we don't charge extra, to file your S corp tax return or do anything like that. And in my experience, there's several other companies that charge extra for tax returns or other services like that, but Collective doesn't. And something else too, I would say kind of the all-in-one for the S corp service. That's something that's pretty unique about Collective. We'll provide the payroll services, we'll handle the bookkeeping, the S corp tax return. Usually before Collective, you had to have several different professionals to handle your stuff. Like in one corner, you'd have to have a bookkeeper oftentimes. Then you'd have to have a CPA at the end of the year to file your taxes. But with Collective, it's just consolidated into one place. All right. What happens if I have an LLC in place? Can you backdate an S corp? Another excellent question. Yes, it's theoretically possible to backdate an S corp election. And if you've had your LLC in place, for the entirety of this year, then like coming into this year, then it's very likely that we'll be able to backdate your S corp election to January 1st of this year. So any money that you've made since January 1st could be rolled into the S corp tax rules. So that's obviously that's pretty exciting, especially if you've made some good money in this first quarter. Backdating an S corp election could be potentially be pretty beneficial to you financially. Is it possible for me to backdate an S corp back to 2022? I mean, I believe that it would theoretically be possible, maybe, to backdate to 2022. Now, again, you'd want to speak to a tax attorney. You definitely want to consult with a CPA or or somebody like that before you did it. But I think it's technically possible. But keep in mind that it can be complicated, and there's some deadlines. Like the deadline to file a 2022 S corp tax return has already passed. So there's just several considerations before you would even attempt to do something like this. But like I said, consult with the tax attorney and see if it's even possible. Okay. Are there any collective success stories you can tell us? Definitely. Like I see success stories every day. For one, I would say, like we're here to save money, to save people money with the S corp, of course. Um, that's part of our job, but also too, our job is to support you and handle this aspect of the business, so you can focus on your business, so you can focus on your clients, building your business. Um, so the success story is, every single person that I speak to that could potentially, benefit from an S corp, then that's a success story. That's a success story in itself, right there. Are there any situations where you'd want to be a C corp instead? Well, there are a couple of situations, and for one, like I mentioned earlier, fundraising with C corps, might be potentially a little bit easier. With C corps, you can issue stock in the business and have several owners into the business. So sometimes it's just a good idea to be a C corp over an S corp sometimes. All right. How skilled is Collective's tax team? Well, obviously, I'm a little biased, but I'd say very skilled. We have CPAs on staff, we have enrolled agents on staff, um, and collectively, pardon my pun, but collectively, there's got to be just countless years of experience in in the tax world. And also too, we Collective is a very niche company. So we focus on freelancers, consultants, people that provide a service. So, we've seen, people's tax situations time and time again. So, chances are that, whatever you're going through, that Collective has seen it and will be able to support you. All right. Ooh, sorry, I had to pop my neck there for a second. Almost forgot I was on video. I am a young entrepreneur. What can I do to set myself up for tax success? Well, I think one of the most, I guess, useful pieces of advice that I could give a young entrepreneur is learn how to be organized. Get organized with your finances, like get organized with the bookkeeping and accounting, track your expenses, track your income. And usually a good idea is to get some sort of accounting software, like QuickBooks or Zero or Wave, and to help you track the stuff. But that's the most important thing is to remain organized. And also too, if you're making a certain amount of money, and here at Collective, we say if your net income is at least around $60,000, that's usually the sweet spot to join Collective. So what I'm trying to say is if you're making a certain amount of money, sometimes it's a good idea to get a tax professional or a company in your corner too. So that's what I would say. But unfortunately, that's all the time that I have today. I've actually got to run and hop on a call with a prospective Collective member. But I hope you enjoyed it, and I hope you found it informative. And please, if you think an S corp or Collective could be beneficial to you, then go to our website, schedule a call with one of our business advisors. Send us a message on Instagram, and we'd be happy to schedule a call. And we're excited to talk to you soon. But if not, I will see everyone next week, next Tuesday for another Tax Tuesday.